All right, I'm back. Let's see if I could get this restarted. Had a computer glitch there. Here we go. There we go. There we go. We're back up and going. Let's just post the link. There. Let's get back. Let's get back. There we go. Beautiful. I believe it's going good. All right. All right. Let's get back. This is too good to miss out on, so I'm gonna get back to what I was talking about here. All right. Come on, man. Open up. Here she comes, the Excel file. So what I was saying about the positions, right? You got to think smart. You got to think outside the box. Don't worry about, what gold should do. Don't think about, any of that stuff, because it's not going to play a role in what gold is about to do. It doesn't matter if gold should go higher. Gold is not going to go higher if the banks have maxed out on their positions, period. All right? Because it's not you or I that pushes the price to go higher. We can't do that. All right? It's only the big institutions that can do that. And so if the big institutions have maxed out on their long positions, they're going to need to take profits on it. So this thing about UBS upgrading their target, to me, it looks like, like a Ponzi scheme, all right? Where they first give you some targets and they come true and you get excited, so you want to put on a larger position. And then eventually when you put on that larger position, because remember, they need retail traders to put on a large position, right? Because they're nearing maximum size on their positions, meaning they have a lot of long positions to offload, right? You can't take profits without getting rid of your positions, right? You acquired those longs at a lower price, you need to offload them to make money. That's just how it goes. So be careful with that. I am not looking to buy gold right now because of this situation. I'd like to buy it in the future after they take profits on their positions, price drops, and then they start to reaccumulate. That's when I would be interested. All right. I was mentioning this to those who follow us on Twitter and on the Telegram channel. Price was dropping into an institutional demand area here. So you can see that short-term momentum to the upside right through here. So this is a demand area. This is the latest area on the daily chart that the banks were buying. So I'm watching this area because once this area breaks through, then we're going to be seeing price decline, okay? That's the area of buying. So remember, CFTC shows that they have been buying. We just dropped into a short-term buying area. What do we expect? Short-term, medium-term, profit-taking on long positions, and that will spiral and cause price to drop. So this is the demand zone that I'm watching for. If this demand gets taken out, guess what that means? The banks aren't buying anymore, which means they're taking profits. Once this gets taken out, that profit taking is going to fuel a move to the downside on gold. So I wouldn't want to be anywhere near holding a long position in gold when that takes place. All right, question. Let's see. One of the best channels in space. Thank you, appreciate it. What happened there? Computer glitch. I had to restart the system. To get max longs, the banks would have had a previous max position that they broke past. What's to say they can't do that again? Nothing. Nothing to say that they can't do it again. Can they do it again? Sure they can. Yes, they can. But it's not likely, okay? We're dealing with what's likely. And what I've seen personally when I've looked at maximum positions and price reaching near max, about 90% of the times, more than that, to 95% of the times, when they reach near maximum positions, they take profits and it causes a drop in price. Okay. Only 5% or less do they surpass that previous historical amount. All right. So when you're dealing with 5%, the chances are it's not going to happen. Can it happen? Sure. But it's likely it's not going to. And that's what we're dealing with. But great question. Deji, what I'm trying to hear.